Breaking news on your screen. Infosys standalone numbers are out. These are standalone numbers 2270. Of course, you cannot react to those numbers because you always need to look at the consolidated picture. But yes, standalone numbers are out. 2270. That's the only number we have. Standalone is at 2265. 2265, I think, is the number. Yes, 2265 is the number. It is not 2270. But it's meaningless to really dissect these standalone numbers. The most operative or the most important key monitorable from Infosys Q3 numbers is the guidance. So it doesn't matter what Infosys has done for the quarter gone by. It is all about what they expect the business will do for the current quarter. Now, as of now, the consensus is that Infosys will slash their guidance, but they will be able to maintain a overall run rate of about 5% plus, because they would also talk about include Lodestone in their FY13 numbers. That's the basic sense on the street. PAT now 2369. These are not standalone numbers. That's way above estimates. So 2369 versus 2225. So we are staring at a good solid 70 crore uptick. So the first set of numbers, they are above estimates. Revenue is not the most important benchmark for Infosys, because it is a $2 billion, because the company currently is clocking a revenue of about $2 billion. So 100 crore here, 100 crore there, really doesn't matter. But it's good to see that for the quarter gone by, which is Q3, in rupees crore, they've managed to grow. I don't think Lodestone is included in it, because Infosys, when they shared their Q2 numbers, they pretty much had indicated that we will be only including the Lodestone numbers from Q4. So the basic numbers are out. Profit above estimates, and revenue also is marginally above estimates. I've got some more details. Let me see if I can talk about some interesting numbers, because the income statement is with me. Nothing on the guidance so far. Margins are looking static. There is an other income. Yes, the income statement is clearly indicating that there's an other income of about 500 crore plus. Now, where is this other income coming from? This could be a tax write back. This could be a one-time currency gain. That's typical of a IT company, because Infosys is a zero debt company. So there is no, debt saving, or there is no other interest saving component which would kick in. North America revenue is stable at 61%. EPS, what they've reported, I've got the basic and the diluted EPS. It's no longer a 10 rupee stock. It's a 5 rupee stock. It is at 41 rupees. Which means they might just do 160 or 162 rupees for this year. Sunita, okay, if I analyze these numbers, they are good. But the minute I look at the other income, I am surprised. Other income is accounting for nearly 20% of the PAT.
Well, that has been the case, and this is surprising. Numbers are good. If you look at anyways, however you look at the numbers, they are pretty good. We were expecting them to grow at roughly about 4%. They have grown at a sharper rate of roughly about 5.8% in dollar revenues. If you look at the margins have also improved in this quarter, so which is a good thing, and it augurs well for futures. Remember, margins were the one area where the concerns were that the margins will continue to be coming under pressure. This was a quarter where the salary hike had kicked in, also the integration of Lodestone, which has a lower margin. So margins were supposed to come down this quarter, but they have been able to maintain. So numbers more or less are better than expected, but we'll need to wait and watch for what they say about the guidance. Guidance is one thing that the market is watching very, very closely, and the management commentary, they have been negative. If you look at TCS is saying that 2013 will be a better year than 2012. While Infosys has been saying that there have been decision delays, there are specific client issues as far as BFSI space is concerned. So we have to wait and watch what they have to say for the next fiscal, how it's panning out, whether the Q4 will be better than Q3. Remember, at the beginning of the year, they had said that the growth will be back-ended, and if Q3 is pans out like this and they are able to do roughly about 3.7% kind of growth in Q4, they will be able to maintain the 5% guidance, or at least 4% guidance for the FY13. So these are the things that we need to watch out for when we look at the numbers. But at the moment, the reported numbers are better than expected, and improvement in margins is healthy.
214 crore rupees, Sunita. That's been Lodestone's contribution this quarter.
That is more or less what we had expected. We were expecting the contribution to be $36 million, roughly about that much in this quarter. So this is more or less in line with expectation. So the performance of organic growth is better than expected. We'll need to work out the numbers, how the volume growth has worked out, whether the pricing pressure continues. Remember, in the previous quarter, the pricing pressure had reduced. It was just 0.2%. But there are concerns that with the company getting aggressive as far as deal pitching for deals are concerned, there were expectations that the pricing could come under pressure. We'll need to work out on those numbers and see whether the pricing has maintained in this quarter, although the management has maintained that the pricing will remain stable, and that's what they're expecting. We'll wait and watch out and go through the numbers with the in detail, to work out how much has been the volume growth. And if you look at the deal pipeline, the deal pipeline has been improving for them. They have been successful in buying deals after they changed the strategy and became more agile as far as deal pitching is concerned. So we'll need to watch out how the deal pipeline they're building on, which will basically fuel their future growth, which has been one of the concerns. We'll have to look at those details, and as far as number is concerned, they are better than expected.